Are the top 10 best performing stocks in 2023 good investments now in 2024? Let's see. Hello everybody, this is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, a.k.a. Mr. Valuation. In this video, we're going to have a little fun with FastGraphs, and we're going to review the top 2023 stocks in the S&P 500, the top 10, and then we're going to look at where they are today and what kind of investments they would look like going forward. So let's now get into FastGraphs and have some fun with FastGraphs. These are the top 10 best 2023 performing S&P 500 stocks, and I've got them just listed in alphabetical order so I can keep track of them. We've got Advanced Micro Devices, Buildings FirstSource, Carnival Corp. Interestingly, two of the cruise ship companies are on the list, Royal Caribbean. We also have, of course, Meta Platforms or Facebook, Nvidia, the AI company, Palo Alto Networks, a system software company, Pulte Home, a home builder. I already mentioned Royal Caribbean, Tesla, and Uber. So let's go ahead and have some fun with FastGraphs, and let's look at these companies and see how they and why they perform. Now, one of the things I always say is measuring performance without simultaneously measuring valuation. It's a job half done. Well, this is all about price performance for the year. But I also like to point out that it's not just important to know what the result was in a certain period of time for a certain company. It's also important to know why and how, because that's the only way I believe you can invest with your eyes wide open. So let's go ahead and look at AMD for starters. And we're going to use adjusted operating earnings as our default metric. Now, one thing about AMD, if I look at this, one beauty of FastGraphs is you can really see the business behind the stock. The orange line on the graph, of course, is earnings per share, and this represents a 10.71% growth rate going all the way back to 2004. But I just want you to notice they had years of losses here, and the stock really languished and did nothing for many, many years. And then they started getting profitable. So as I shortened the time frame, all of a sudden I discovered that the growth rate accelerated dramatically from 2017 all the way through 2024. But we had some pretty crazy years in 2017 and 2018. So let's take one more year off, and now we had 50% growth. Let's take another year off, and now we've got 39% growth. When I look at forecasting going forward, they still, analysts, and there are a lot of analysts that are following this company, believe that it's going to grow at 35% for the year. But I want you to notice that now the stock has gotten pretty highly valued, and we're starting to see some chink in the armor in 2024 here. But let's go back to the historical graph, and let's run this now through a 5-year chart. This is one of the beauties of FastGraph, and I did this so that I could focus on 2023. So let's go ahead and look at from the December 30th, 2022 through December 29th, 2023, that year. Now, what the stock did for that 1 year is had 127% capital appreciation. Now, this stock doesn't pay a dividend. So Advanced Micro Devices had a really good year, and it's really inexplicable why they had a really good year, because the one thing I would like to say is the stock got fairly valued. It had actually a very bad year in 2023 from an operational point of view, and the stock got really overvalued, and now we're starting to see a kink in the armor. So I consider this one kind of unexplainable. So let's go ahead and look at the next company through the same process. Let's look at Builders FirstSource Inc. Now, this is a building products company, and home building and building was pretty hot. And as you can see, coming out of COVID, we had this huge explosion of earnings growth, and we had this huge explosion. But once again, here's a stock that doesn't pay any dividends and really had some very poor operating history coming out of the Great Recession. The stock price languished in COVID, but the company actually did very well during COVID. And then, of course, we had these 2 huge years. So now if I shorten this to a 5-year time frame again and go ahead and look for 2022 and 2023, let's go into 12/30/2022, and then let's go out to 12/29/2023. And Builder Square was up 159%. Now, relative to the earnings growth that we're showing here, it was really significantly undervalued. But if I shorten the year, I want you to notice the earnings growth really slowed down quite a bit. But in 2022, they had an 81% growth year, and then minus growth in 2023, but yet the stock did as well as it did for that year. And a lot of that had to do with just this explosive growth going on. So let's move on. Let's go to Carnival Cruise Line. And once again, we see a rather inconsistent company. I want you to notice the white line is dividends. Coming into the Great Recession, I call it, of 08 and 09, the company actually eliminated their dividend. Then they started paying a dividend again, and the stock reacted. And it was doing pretty well going through years 2014 up through 19. Then, of course, COVID came, and they had to literally shut down, and earnings went negative, and it collapsed, and the stock price collapsed. And we had some dead cat bounces here, as people like to call them. So, we went through 3 years of negative earnings, literally losses, big losses, $7 a share for 2 years and almost $5 a share in 2022. But then in 2023, their earnings kind of flattened. So let's again go into fast graphs. Let's run the 5-year graph, and let's look at 12/30/2022, and let's go to 12/29/23, and we see 130% gain for that year. Now, interestingly enough, a lot of volatility. I want you to notice that. The stock went from a price of $8.06 up to 11, then down to 9, and then all the way up to 19, and then all the way down back to 11. So that's almost a 50% loss. So there's a lot of volatility here. And forecasting-wise, the stock is looking like it's going to really do well going forward. Now, this earnings growth rate calculation here is anomalous because what you're looking at is a massive increase here. But if I'm looking at the next couple of years, I'm looking at 41 or 2%, which is a nice number for 2025, and 21%. If analysts expect long-term growth, they don't give an estimate for long-term growth. So there's still a lot of uncertainty here. But anyway, you can see how Carnival Corporation's stock price was extremely volatile in 2023, even though the net result was good. The next company I want to look at is Meta, or Facebook. And what I really want you to see here is that Facebook got very inexpensive in 2022 and 2023. We had this drop in earnings in 2022 of almost 38%, but then we had really strong earnings. This one is one of the companies that actually makes the most sense to me, because if I do the 5 years again and I look at the recovery of earnings was very, very strong. But again, if I go to 12/30/22 up through 12/29/23, this stock almost doubled in that short period of time frame. But I want you to notice for 2024, the momentum continued, but now we're starting to see a little chink in its armor. If I look at forecasting, however, the analysts do expect good growth, and the stock is perhaps going to be moving back into fair value again. The long-term growth rate is very similar at around 20%. So Meta, or Facebook, is kind of an interesting one here. But again, I want you to note the relationship between earnings and stock price. The next one we're going to look at is Nvidia. And again, Nvidia, I'm going to use the scroll feature of fast graphs. You can have a lot of fun with fast graphs looking at these stocks. I'm going to go take this back here, and I want you to note that the earnings correlations were actually very strong on Nvidia from 2005 all the way through here. We saw periods of growing earnings, and then the recession came, and of course earnings fell, and so did the stock price. Then earnings began to recover. The company started paying a dividend in 2013. And then as I go forward, they still pay a very small dividend, but it's almost negligible on the stock. We had this huge growth with artificial intelligence in 2024 and 2025. And I'm going to argue in anticipation of that, the stock really surged. So if I look at, again, 2023, let's go to December of 2022. Now, this has a January fiscal year, so it's a little harder to find it, but I do want you to see that. So we're going to go to 12/29/2023, and Nvidia was up 2.5-fold almost in that short period of time, and it's continued to rally, but we're starting to see some performance issues going forward now, and we'll see what it holds. Looking at Palo Alto, again, if you look at this stock, this has really been a very consistent and high growth stock. The market has put a very strong high valuation on it, as you can see. And now if I go to the 5-year graph once again and look at what it did in 2023, so I'm going to find 12/30/2022, and I'm going to go here to 12/29/2023, right, approximately that year, and we have a 111% gain. The beauty of fast graphs, now once again, momentum continued through the first quarter of 2024, but then we start to see some fallout once again in 2024. The next best performer was Pulte Homes, and this is a home builder. It's very similar to Builder Square. And if I look at the max graph on this stock, it's very inconsistent growth, but there are times when the growth really surges, as it did here from the period 2017. We had very strong earnings growth, but the market never put a very high valuation. I do want you to note that. But if I run this as a 5-year graph, having this ability to analyze these different time frames is really one of my favorite features of fast graphs. So if I look here at 12/30/2022 and I go to 12/29/2023, this stock was extremely inexpensive at the start of 2023 with a PE of only 4.14, and the PE expanded to 8. So the PE doubled virtually in that time frame. Earnings were good for that year, and the stock was up 128% for the year. So it was a very interesting stock in 2023. Now, Royal Caribbean was very similar to what we saw. We saw the same situation as we saw with Carnival. Different numbers, but very similar. The Great Recession, they had some poor performance, and the stock price reacted. During COVID, once again, they were shut down. And just like we saw with Carnival Cruise Line, 2023 turned out to be a pretty good year for them, as the company was basically starting to get their mojo back, if you will. They were running cruises again, and their earnings growth was extremely high. But this is moving back into reality. So these numbers, they can be misleading. You want to be careful. But nevertheless, the stock was up 162% in 2023. And it still has some momentum. Now, looking at forecasting going forward, it is expected to continue growing at a very high rate for the next couple of years. But a lot of that, and again, no long-term estimates, analysts aren't courageous enough to do that. So these companies, Royal Caribbean, that is, and Carnival, have really kind of gotten their mojo back, as I like to say, and they're looking pretty good. And then, of course, Tesla. What a wild ride Tesla has been over the years. And I'm going to take the normal PE off of the graph here because it's crazy. The numbers are accurate the way they're calculated, but it's really crazy. You can see the massive volatility that we see in Tesla. And again, if I hone in to 2023 and we start with December 30th of 2022 and we go out to December 29th of 2023, the stock doubled. Once again, I want you to notice the volatility of Tesla. It was really kind of crazy over this time frame. Again, Tesla is a very interesting company. They've actually started to make money. They actually generated a lot of losses for several years, and you can see the stock was kind of flat. And then we started having this explosive growth in earnings, and we saw the stock price really react. To me, a lot of hype and hysteria, but we can also see the risk of high valuation in multiple times when I look at Tesla here. So that's Tesla, and then here's Uber. Uber is a company that really hasn't made any money historically. And if I look at 12/30/2022 through 12/29/2023, the stock was up 150%. But a lot of it was because they actually finally started to make earnings, and we had a lot of hype. Now, earnings determine market price in the long run, but emotions can determine market price in the short run. And we see that here with Uber, where all of a sudden the stock started to earn some money, and of course investors got all excited. But is this the right time to be buying Uber today? I'll let you decide that. Anyway, this has been Chuck Carnevale. I hope you enjoyed this. It was having fun. You're looking at the best stocks for 2023. I'm going to do a part B to this video. These are the top 10 stocks in the S&P 500 in 2023. I'm going to look at the next best 10 stocks in 2023 as well. So we're going to be covering the top 20 with these two videos. And the idea is to basically look at these stocks and try to understand and make some sense of where the performance came from and why it came from. And then it's also important to consider what these stocks are going to look like in 2024. Thanks for watching. Hope you enjoyed it. If you did, give me a like. Share this with your friends. Subscribe to the channel if you haven't already. And of course, take a look at FastGraphs. FastGraphs is a great research tool. It really helps you understand the business behind the stock you're looking at. But you could also have a lot of fun with FastGraphs. So thanks for watching, everybody, and we'll be talking to you very soon again.